Hi, my name is James Weston, and I'm a professor here at the Jones School at Rice University. I teach the core MBA class in the daytime program, and one of the things we spend a lot in the finance course is calculating return on investment, talking about things like net present value and internal rate of return, and trying to figure out the when, where, how, why companies should spend money, and whether the cash they get back on their initial investment is sort of worth it. And I thought it would be fun to talk to some prospective MBA students about the return on investment you should expect to receive from investing in a Master's of Business Administration, your MBA degree. When you're making that investment, it's very similar to what a corporation does. You're investing in your human capital, hopefully in order to capture a series of dividends that'll come in down the road through a better salary and a better career and a better growth trajectory. And so I thought it'd be nice to walk through some of the financials of getting an MBA degree with the same sort of arm's length objective criteria that we would use to study whether corporations should be spending money. So let's walk through the costs and benefits and map out the tools and see what the financials look like from an MBA degree. The first thing we'll start with is some of the expenses. As you can imagine, one of the big ones, of course, is tuition. Now, if you were coming to Rice, the tuition would be somewhere around $73,500. That's a lot of money, and that's times 2 years. Of course, one of the other big expenses from getting an MBA degree, especially if you're going to come to the full-time program, is your lost salary. And so if you were going to leave the workforce and come in to get your MBA for 2 years, you're gonna have to lose, our students coming in are typically leaving a job that's paying them about $70,000 a year. So you're losing also that times 2. That's one of the costs, opportunity cost of lost salary. Now, what you get on the flip side is a much better starting salary. So our MBAs, when they leave the program, have a starting salary of a bump to about $157. That was the median starting salary for our MBA students last year. So that's a nice big bump. You go from $70,000 to about $160,000. You ought to if you're going to invest in a graduate degree for that much money. The other thing that's important to note is what is the growth rate in salary for no MBA? And there, we'll just sort of take the average salary growth across the US labor market at about 2.5%. These are some back of the envelope numbers. And the growth rate in your salary with an MBA degree, which we know from surveys and labor studies that that's going to be a little bit higher at about 3.5%. These are average numbers. So on average, our students would be leaving a job making about $70,000 a year with an expected growth rate of 2.5%. Our MBA graduates are starting with a salary 2 years later of $157,000, growing at 3.5%. Now, the other thing we might need is a tax rate, which we'll just ballpark at 25%. That's not too important. And the discount rate, which we'll just for argument's sake keep it simple and make that 10% when we do our present value. Okay, that's all the ingredients that we need in order to cook up the financials for this investment proposal. And so what we would do is same thing we would do in class in a spreadsheet is we'd sort of bang out for the next 30 years, what are the after-tax cash flows from getting an MBA, no MBA, and then getting an MBA. And we would say, what are the after-tax cash flows from each of these proposals? And of course, for the first 2 years, the MBA degree would be negative, and then positive dollars for 30 years. And for the MBA, we would start with the $70,000 and that would grow at 2.5, and we would just kind of bang that out for the next 30 years in the spreadsheet. Then what we would do is we would take these after-tax cash flows, we would hit them with a 10% discount rate, and that's what we would use to calculate some present values. So we would calculate, for example, the present value of not getting an MBA, and then we would calculate the present value with an MBA. If we calculate the sum of the discounted cash flows for the no MBA scenario, that would get us to about $631,250. Okay, that's a big number. That would be the present, if you started with the $70,000 and just earned 2.5% growth a year, the present value of future salary, all those cash flows discounted, would be about $631,000. If I got the MBA, it would be a little bit better. It would be $1,041,041, if we just did the math in the spreadsheet, $491. Now, what we can do is take the difference between those two. we would say, what's the present value of your future salary if you got the MBA, less the present value of not getting MBA. The opportunity cost of getting the MBA is not getting the MBA. So all we have to do is subtract these two things to get a net present value. The net present value then is going to be $410,241. And if I did the return on investment, or what we sometimes in finance call the internal return on investment, internal rate of return, the ROI would be about 20% on the investment of getting an MBA versus not getting an MBA. Okay, so if we looked at this with an arm's length and objective financial analysis, and I told the company that this investment would generate $410,000 with a return on investment of 20%, I think everybody would agree that's a terrific project. And the truth is, that's true of an MBA degree. The financials, the return on investment, the net present value of getting a master's in business administration is about one of the highest return on investments you can get anywhere in academia. It's a really good investment. So I hope this analysis gives you some ballpark numbers for thinking about what the value of an MBA is. I hope it inspires you to apply to the Jones School or wherever else you're thinking about going and getting an MBA. If you found this analysis compelling, I hope that I see you in class one day.